With everyone laser-focused on the usual tech darlings of 2024, there's something massive brewing beneath the surface that most investors are completely missing. As we step into 2025, I've identified 5 companies that are quietly positioning themselves for explosive moves. And no, I'm not talking about the overhyped names you're seeing everywhere else. Look, the market delivered solid returns in 2024, but that's created a dangerous blind spot. While the mainstream media keeps recycling the same old stories, there's a perfect storm forming that could reshape the entire investment landscape. We're witnessing 3 seismic shifts converging at once: an AI revolution that's spreading into unexpected industries, a dramatic pivot in interest rate dynamics, and a market rotation that's creating unprecedented opportunities for those who know where to look. What I'm about to share with you isn't just another hot stock list. I've uncovered a tech powerhouse that analysts believe could surge nearly 50%, yet it's flying completely under the radar. There's a software giant that's quietly transforming its entire business model in a way that could shock the market. I've found a dividend heavyweight that's offering an incredible 6% yield while everyone else is looking the other way. Then there's an industry leader sitting on a breakthrough that could redefine their entire sector. And perhaps most intriguingly, I've identified a company that's positioning itself to solve one of the most critical infrastructure challenges of our time. Here's what makes this truly fascinating. Each of these companies is approaching a critical inflection point. And January 2025's unique market conditions? They could be the spark that ignites this powder keg of opportunity. But before I reveal these companies, there's something crucial you need to understand about January's historical performance patterns that makes timing absolutely critical right now. Before we dive deep into these opportunities, do yourself a favor and hit that subscribe button, because we're going to be tracking these plays and uncovering new ones throughout 2025. Now let me show you why our first company is about to completely upend the AI industry in a way that nobody sees coming. Stock 1. Advanced Micro Devices, ticker AMD. Let's dive into our first pick that's about to shake up the entire AI landscape, Advanced Micro Devices, or AMD. Now, here's something that'll blow your mind. While everyone's been obsessing over NVIDIA, this $200 billion giant has quietly been assembling what could be the biggest technological breakthrough of 2025. I can already hear you asking, but wait, isn't AMD down 15% over the past year? Exactly. And this is where it gets fascinating. While the market's been sleeping on AMD, they've been executing a master plan that could completely reshape the AI chip wars. Wall Street analysts are projecting a price target of $185. That's a potential 50% upside. But here's why even that massive target might be conservative. Let's talk numbers that'll make your jaw drop. AMD is trading at just 24.9 times forward earnings. For context, their 5-year average is a whopping 59.4 times. We're looking at one of the main players in the AI revolution trading at less than half its historical valuation. It's like finding a Ferrari at Toyota prices. But here's where the story gets really juicy. 3 major catalysts that nobody's talking about. First up, AMD's new MI300 AI accelerator. While everyone's been hyping up NVIDIA's chips, AMD has quietly developed something spectacular. Early benchmarks? They're not just competing, they're outperforming in certain key areas. Microsoft and Meta have already jumped on board, and this is just the beginning. The second catalyst is mind-blowing: the AI PC revolution. Remember how everyone declared the PC market dead? Well, plot twist. Every single laptop and desktop is about to need serious AI horsepower. AMD isn't just ready for this wave. They're positioning to dominate it with both CPUs and AI accelerators. This isn't a small upgrade cycle. This is a complete reinvention of personal computing. And the third catalyst? This is my favorite. AMD's data center business is absolutely exploding. We're talking about a $300 billion market by 2027, and AMD is snatching up market share like it's going out of style. Their EPYC processors aren't just winning contracts, they're changing the game in cloud computing. Look, here's the bottom line. AMD at these prices is like finding a winning lottery ticket before the numbers are drawn. With 2025 earnings projected at $5 per share and their current EV to EBITDA ratio at historic lows, this isn't just another chip stock. This is potentially the next chapter in the AI revolution. And speaking of AI revolution, wait until you hear about our second pick, which is approaching AI from a completely different angle. Stock 2, Salesforce, ticker CRM. Now, let me introduce you to our second powerhouse pick, Salesforce. And if you think this is just another boring software company, you're about to witness one of the most remarkable transformation stories in tech. Here's what's mind-blowing. While most tech companies are just starting to figure out AI, Salesforce has quietly engineered what might be the most profitable AI integration we've seen yet. We're talking about a $318 billion giant that's not just growing. It's completely reinventing how businesses operate. Now check this out. Salesforce shares are up 30% in the last 12 months. Impressive, right? But here's the plot twist that has me incredibly excited. This might just be the warm-up act. Wall Street's targeting $400 a share, suggesting another 20% upside. But wait until you hear what Dan Ives at Wedbush is saying. He's calling for $425. And here's why these targets might actually be conservative. Let me show you something that's absolutely transforming Salesforce's future. Their margin story. This is where it gets fascinating. Just a few years ago, they were running operating margins in the mid-single digits. Today, they've exploded to 17%. But that's not even the best part. Their EBITDA margins? They've skyrocketed from 15% in 2022 to 19% in 2023. And now they're crushing it at over 25% in the last 12 months. Think about what this means. Salesforce isn't just growing. They're becoming a profit-generating machine. Every dollar of revenue is now worth significantly more to the bottom line. And here's the kicker. They're achieving this while investing heavily in AI integration across their entire platform. Their EV to EBITDA ratio is sitting at 30.5x, the lowest we've seen in a decade. Let that sink in. A company in the middle of an AI-driven transformation, trading at historic low valuations. Looking ahead to 2025, analysts expect earnings of $11.22 per share. But here's what they might be missing. Salesforce's AI integration isn't just an add-on feature. It's becoming the backbone of how thousands of businesses will operate in the future. They're not just selling software anymore. They're selling the future of business automation. And speaking of automation and power, wait until you hear about our next pick, a company that's about to revolutionize how we think about energy independence. Stock 3, Generac Holdings, ticker GNRC. Now, let me introduce you to one of the most fascinating opportunities I've seen in 2025, Generac Holdings. This isn't your typical tech stock or AI play. This is a company that's solving one of the most critical problems of our time, power independence. Here's what makes this story incredible. Generac's stock has surged 35% over the last 12 months, showing strong momentum. But here's where it gets interesting. We just saw a 13% pullback in the past month. And here's the kicker. This drop happened with absolutely no bad news or negative earnings. This could be the opportunity smart investors have been waiting for. Let me put this opportunity in perspective. We're looking at a $9 billion company that's literally powering the future of energy independence. During the pandemic, they saw record-breaking sales as people realized just how crucial backup power is. But here's what most investors are missing. They're not just maintaining those levels. They're hitting new records in free cash flow with stronger margins than ever. But the market's short-sightedness is creating our opportunity. At current levels, Generac is trading at just 18.8 times forward earnings. That's dramatically below their 5-year average of 26.3 times. Their EV/EBITDA ratio, sitting at 16.4 times, well below their historical average of 19.3 times. With projected earnings of $8.29 per share in 2025, we're looking at a severe undervaluation. Think about the catalysts lining up. Increasing frequency of extreme weather events, aging power grid, infrastructure, growing demand for energy independence, push toward home electrification. Wall Street analysts are targeting $180 per share, suggesting a 15% upside. But here's why I think they're being too conservative. They're looking at Generac as just a generator company. What they're missing is that Generac is positioning itself at the intersection of three massive trends: energy security, smart home technology, and climate resilience. This recent 13% dip? It's like finding a premium insurance policy at a discount exactly when you need it most. And with their record-free cash flow levels, they're not just surviving, they're investing in the next generation of power solutions. And speaking of opportunities in essential services, wait until you hear about our next pick, a company that's dominating one of the most recession-resistant real estate sectors in America. Stock 4, VC Properties, ticker VEAS. Let's talk about our next pick, VC Properties. And before you yawn at another real estate stock, let me tell you why this $31 billion giant might be the most exciting income play of 2025. Imagine owning a piece of the Las Vegas Strip's most iconic properties. We're talking Caesars Palace, MGM Grand, and a portfolio that reads like a who's who of Vegas royalty. Now here's where it gets interesting. While VC shares are down 10% over the past 12 months, we're looking at what might be the buying opportunity of the year. Why? Because Wall Street is missing something huge about this company. Let me drop a bombshell that most investors are overlooking. During the pandemic, when most real estate companies were begging tenants for partial rent payments, VC maintained 100% rental collection. Yes, you heard that right. 100%. Even when other premium rates saw their collections drop to 50%, VC didn't miss a beat. This isn't just a real estate company. This is a cash flow fortress. But here's where the opportunity gets juicy. VC is currently offering a mouth-watering 5.87% dividend yield. And this isn't some desperate high yield that's about to be cut. They've increased their dividend every single year since going public. Think about that. Steady increases even through a pandemic. Wall Street analysts are targeting $35 per share, suggesting over 20% upside. But here's the kicker. You're not just getting that potential price appreciation, you're also locking in that 5.87% yield. That's a potential total return approaching 30%. Let's talk numbers that will make value investors drool. VC is expected to generate $2.32 per share in AFO in 2025. They're trading at just 12.5 times forward AFO, dramatically below their 5-year average of 16.3 times. In simple terms, this Ferrari is priced like a Corolla. But here's the real magic of VC's business model. They're not casino operators. They're landlords to the best operators in the business. They don't need the casinos to hit record profits. They just need them to pay their rent. And with the quality of their tenants and properties, that's about as close to a sure bet as you'll find in Vegas. And speaking of sure bets in technology, wait until you hear about our next pick. A company that's about to revolutionize how we connect in the mobile world. Stock 5, Qualcomm, ticker QCOM. Now let me introduce you to what might be the most underappreciated tech giant of 2025, Qualcomm. While everyone's been chasing flashy AI stocks, this $176 billion powerhouse has been quietly positioning itself at the intersection of AI, mobile computing, and the future of connectivity. Here's what fascinates me about this opportunity. Qualcomm stock is up just 9% over the past 12 months. In a market obsessed with semiconductor stocks, how is this possible? Well, that's exactly where our opportunity lies, and I'll tell you why. This could be about to change dramatically. First, let's address the elephant in the room, the ARM lawsuit over their Nuvia acquisition. While this has been hanging over the stock like a dark cloud, here's what most investors are missing. Recent case developments are strongly favoring Qualcomm. And when this cloud lifts, we could see a massive re-rating of the stock. But here's where it gets really interesting. Wall Street is targeting $200 per share. That's a 25% upside from current levels. But they might be missing the bigger picture. Qualcomm isn't just a smartphone chip company anymore. They're transforming into an AI-powered connectivity powerhouse, expanding into automotive, Internet of Things, and edge computing. Now let's talk about something that income investors will love. Qualcomm's dividend story. They've been increasing their dividend for nearly 20 years straight. We're talking about a 2% yield from a company that's on the verge of a major technological breakthrough. It's like getting paid to wait for the next tech revolution. Here's what makes this opportunity so compelling. Qualcomm is trading at just 14.1 times forward earnings, well below their 5-year average of 16.6 times. With projected 2025 earnings of $11.19 per share, we're looking at a valuation that seems almost too good to be true for a company of this quality. Think about the catalysts lining up. The global 5G rollout is still in its early stages. AI integration into mobile devices is just beginning. Automotive connectivity is exploding. The ARM lawsuit resolution could be a major positive catalyst. But here's what really excites me. While everyone else is paying premium prices for obvious AI plays, Qualcomm is quietly building the infrastructure that will power the AI revolution at the edge. They're not just playing in the AI space, they're building the highways that AI will travel on. And speaking of AI revolutions, wait until you hear about our final pick. A company that's about to challenge the very foundation of AI computing. And there you have it, 5 stocks that could define your 2025 portfolio. Think about the massive opportunities we've uncovered today. We're looking at AMD, positioned to challenge NVIDIA's AI dominance with a potential 50% upside. Salesforce, transforming from a simple cloud company into an AI profit machine targeting 20% growth. Generac, the power independence play, offering 15% upside while protecting against grid uncertainty. VC Properties, combining Vegas real estate dominance with a 20% upside potential and that incredible 6% yield. And finally, Qualcomm, the sleeping giant in mobile AI, positioned for a 25% surge as their legal challenges clear. What excites me most is how each of these companies isn't just riding trends, they're actively shaping the future of their industries. From AI computing and business automation to power independence, real estate innovation, and next-gen connectivity, these 5 stocks give you exposure to some of the most transformative trends of 2025. But here's the thing. The market waits for no one. And January 2025 could be the moment these opportunities start to take off. If you want to stay ahead of these moves and get real-time updates on these stocks and more opportunities like them, do me a quick favor. Hit that subscribe button and bell icon right now. You don't want to miss our next analysis. If you found value in today's breakdown, smash that like button and drop a comment below telling me which of these 5 stocks you're most excited about and why. Your engagement helps us deliver more in-depth analysis like this. And as always, this is for educational purposes only. Always do your own research and due diligence before making any investment decisions. See you in the next one.